Here's another excellent real estate tip about the U.S. financial crisis from Phil Mitsch, who is America's #1 rated real estate and mortgage trainer and the real estate industry's all-time top producer.
Hello, this is Phil Mitsch. In this educational session, I want to talk to you about what the U.S. real estate market and overall economic financial problems are. Now, before I tell you what the 5 major reasons are as to why the United States has slipped into the worst real estate market and overall economy in our country's history since the year 2004, I want to list for you what the many and very serious financial problems are that our real estate market and overall economy are now facing as we enter the year 2008. These financial problems have developed as a result of massive payment delinquencies at all consumer debt levels. These delinquencies, for the most part, have developed from excessive consumer borrowing and spending and irresponsible, immoral, unethical, and illegal lending practices that took place between the 6-year period 1998 through 2004. By the way, every one of the financial problems that I am about to list for you, again, are at record-breaking amount levels. I want to make it perfectly clear right now, there is absolutely no quick fix formula that will result in getting the real estate market and the overall economy stabilized and back on positive tracks overnight. Why? Because the financial problems that have developed since 2004 are so monumental that the best case scenario for America is that if these financial problems are addressed and solved, it will only result in a stabilization and gradual growth of our real estate market and overall economy. Now, here is a list of the many and very serious financial problems that the real estate market and the overall economy are currently experiencing as we go into the year 2008. And remember, every one of these financial problems that I'm about to list for you are at record-breaking amount levels. Number 1, purchase mortgage payment delinquencies. Number 2, refinancing mortgage payment delinquencies. Number 3, second mortgage payment delinquencies. Number 4, home equity loan payment delinquencies. Number 5, personal loan payment delinquencies. Number 6, business loan payment delinquencies. Number 7, credit card payment delinquencies. Number 8, promissory note payment delinquencies. Number 9, car, boat, motorcycle, plane, and educational loan payment delinquencies. Number 10, payment delinquencies at virtually every other imaginable consumer debt level as well. Number 11, consumers with subprime credit ratings. 12, properties in pre-foreclosure. 13, foreclosed properties. 14, personal and corporate bankruptcies. 15, sheriff sales. 16, tax sales. 17, lender workouts. 18, lender short sales. By the way, lender workouts and lender short sales should be absolutely mandatory by the federal government in order to cut lenders' losses, and I'll be discussing that in other educational sessions. Number 19, properties for sale that are increasing. 20, properties for rent that are increasing. 21, inventories of many consumer products that are increasing. 22, property owners who owe more than what their real estate is worth. They're in a negative equity position, which means they're upside down. 23, property owners who have no equity. 24, property owners who cannot sell their real estate. 25, property owners who cannot refinance their real estate. 26, home buyers who cannot afford to purchase real estate. 27, lenders who are scaling down and going out of business. 28, mortgage insurance companies who are scaling down and going out of business. 29, investment companies who are scaling down and going out of business. 30, real estate companies who are scaling down and going out of business. 31, builders who are scaling down and going out of business. 32, other types of companies that are directly and indirectly involved with the home buying, home selling, home improvement, and lending processes who are scaling down and going out of business. 33, request for government bailouts. 34, government bailout, which, by the way, will be continuing for a long time. 35, consumer income is decreasing. Disposable income I'm talking about. Number 36, consumer borrowing is decreasing. 37, consumer spending is decreasing. 38, real estate ownership is decreasing. 39, real estate values are decreasing. And 40, real estate equity is decreasing. There you have it, the top 40 financial problems that the U.S. real estate market and economy are facing as we enter the year 2008. Now, when you combine all of the above record-breaking amount of financial problems that I have just listed, you have a perfect storm formula that will lead the United States to total financial disaster and its second Great Depression. Again, this is the bad news. But the good news is, and I've said it before and I'll say it again, and I'll keep saying it, the second Great Depression can be avoided, and the real estate market and the overall economy can actually be stabilized and gradually put back on positive tracks as opposed to the negative ones that they are currently on. But the good news, ladies and gentlemen, and again, I've said it over and over and over again, it's only possible if new, revolutionary, and state-of-the-art business practices are created, adopted, and implemented today and not tomorrow. And I hope the government is listening. Now, for those of you who want further information about why the United States has slipped into the worst real estate market and overall economy in history, and more importantly, what needs to be done in order to get them back on positive tracks, then you need to get a copy of one of my new books, which is entitled The Second Great Depression Can Be Avoided. This book, by the way, is one of the 5 books that comprise my new real estate market training system, which is now available for all Americans.
For further information about Phil Mitsch, his sensational new book titled Second Great Depression Can Be Avoided, his 68 other books, his 8 training systems, his blog, and his other excellent training and educational services, visit philmitchuniversity.com, the website that the world is quickly turning to for the best advice on how to solve the U.S. real estate market and overall economic financial crisis.